Hi guys, this is the introductory video to DCA Algo or DCA Bot, where DCA stands for dollar cost averaging. DCA Algo is a very powerful trading tool. It can be used for various purposes and is highly efficient when used correctly and carefully. So let's start with the overview of what it is. Then we'll look at two main modes that Algo can be used with, and look at the scenarios each of the DCA modes allows you to use it for. In the next video, we'll look, and the next separate video, we'll look at the nitty-gritty of all the setup instructions, but this video is an intro video only. Okay, let's start. So it goes from the name DCA Algo. What it does, it does dollar cost averaging, right? So basically what that means is pretty simple. If you just look at this visualization on the chart here, it's pretty much self-explanatory. So what it does, it creates an entry order. So it enters the position. For example, this time it will be buying. So let's say it will be buying here, right? You set the buy order here, and then you can set several number of so-called averaging orders that will be, in this case, placed lower. So they serve this. The purpose they serve is if you bought an asset here and the price goes against you, so it continues to fall, you will buy again here, and you will buy again here, and buy again here, here, and here. Basically, dollar cost averaging your position size and price. So basically, you're making your position average position price cheaper. And that's basically what DCA is for, right? So again, there is an entry order. In this case, it's a buy order. Then you can place several so-called averaging or safety orders. You can select the number of them and their size, or kind of relation between size and price. There are various options there, which we'll look upon in the next video. But basically, you say, we buy here. If the price goes against me, I will buy more at a lower price to basically average my entry price down. And what that means is that if I, when I bought here, I have a take profit here, right? So basically I bought here and my take profit will sell here. It says take profit buy, but it's because it's like kind of the buy orders, right? So the side is a buy side. So we start with the buy. So this take profit plays to this buy order as opposed to the sell order. I'll show it later. So again, you bought here, you have a take profit here. Obviously, if you bought more at this price, your average position size price will be higher than this price, but lower than this price. Will be somewhere here. That means your take profit basically will move lower. So if you have a take profit, let's say at 1% here, so it will keep that 1% from your average price. So you bought here, you added here, your average price is somewhere here. The take profit will move lower automatically to stay at the same percentage from your average price. And obviously it will adjust its size as well automatically, right? So if you bought one coin here and added another coin here, your take profit here was it for one coin, it will move lower and will be now for 2 coins. And the same will repeat basically if the price keeps going against you and your averaging or safety orders keep executing, right? Same goes for a stop loss, right? If you add a stop loss here, let's say here is a stop loss, that same goes for a stop loss. So you bought here one coin, your stop loss is here, it's for one coin. You added another coin here, the stop loss automatically adjusted its size to reflect your true position, right? Stop loss doesn't move, obviously, it's there for a reason, so it will only, you probably can set it maybe here, right? So if all your averaging orders executed, you don't have anything else to to help you to average your position down, but the price keeps moving against you, you have this option of having a stop loss here. As you know, stop loss is always good to have in any trading setup for that matter. So again, to sum it up, what DCA Algo does, it enters a position, places additional orders, the number and the size of those orders and their step between those orders is of your choosing, places additional orders to average down your position if the price keeps moving against you, and it has take profit and may have or may not have stop loss, and take profit to stop loss, they will adjust automatically to reflect your average position size and average position price and your actual position size, right? So we will look at if you start with the buy order and if you start with the sell order. Basically, it does completely the opposite. Still, there is an entry order here, and it places additional. So you sell here. If the price moves against you, sell more here, sell more here, sell more here, sell more here, sell more here. Again, averaging your entry price, in this case, up, right? And they have a take profit, which is now lower, obviously, so you basically want to buy back cheaper than you sold it for, and the take profit will the same. It will move with the average position price as it goes up, basically to stay the same percentage from your average position price, and the take profit and stop loss sizes will adjust automatically as well. So that's pretty much in a nutshell what the DCA Algo does. It sounds pretty straightforward and pretty simple, yet, as I said at the beginning, it's a very, very powerful tool if used correctly, and there are numerous scenarios you can actually use it for. So let's move to the next step in our intro, to two main modes that this DCA Algo, DCA Bot can be used with. So one and obvious mode is the manual mode, right? The manual mode pretty much we've just covered. So that means that you decide for yourself whether you want to start with the buy order or with the sell order. So basically you want to go long or short. And at the moment, if you start with the manual mode, to start with the buy order. So once you launch the algo, it will immediately send the market order to the market, entering the position with the buy order. So it will be a long position or a short position with a sell order. In the future, obviously, there will be other order types here, and maybe other triggers here. So you might have. You will be able to place a limit order, a stop market order, a stop limit order here, or maybe even a trailing order to enter actually. But for the moment, it's pretty simple. You buy with the market order, you sell with the market order if you choose the manual mode, right? And then DCA does what I've described previously. If you buy here, basically will place additional orders, the number of those orders and the size of those orders is of your choosing, to average down your price. If the price keeps going against you, and they will take profit, which will move and adjust accordingly with the price, and there will be stop loss, which will also adjust its size automatically as new orders execute. Right, so that's the manual mode. There are basically three main scenarios, or three main ways to use this manual mode of DCA Bot. First, this kind of straightforward, again, that's basic and straightforward use case. You believe now that, let's say we are now here at Matic, you believe that Matic is going up. So normally what you would do, if you will believe that Matic is going up, you will buy it and you will set a take profit and a stop loss, right? So that's what you would do normally in a normal situation. Here with the DCA algo, you can do one better. So yes, you still buy here, and you place a take profit above. And if you are right and if you are correct, but here and the price went up, take profit triggers. You made your profit. Good for you. Perfect. However, if the price goes against you, and actually after you entered, it goes down, you'll be able, not you won't hit stop loss right away, but you will have additional orders that will basically protect you from if your initial hunch or initial trading idea that the price will go up was wrong, right? So basically, rather than sending just a simple buy order with a take profit and stop loss, you can do one better. You can choose maybe, okay, let's simple it a bit and just choose one averaging order at some, let's say at some distance like this. So that basically will be your setup. You entered here, you put a take profit here, stop loss here, but you have another order here, right? So basically that's the basic idea of what you can do with manual DCA, right? So not simply buy with take profit and stop loss, but add another level of protection for yourself, basically add averaging orders below your entry price. But the same token, of course, if you believe that the price actually of the Matic will go down rather than up, and you have some Matic, or you're trading futures for that matter, you basically switch it to the sell mode, and you send the sell order here. And again, normally you would have a take profit here and a stop loss here, but now you have an option of having another 1 or 2 or 3 or up to 10 or even 20 if you're Algo 2x subscriber, averaging orders that will protect you if actually initially Matic price will go up rather than down. Again, why would you do that? Often cases your kind of medium term and long term you're right, and Matic probably is going down, but in the meantime it can shoot up before it will actually eventually go down, and that's exactly the situation that DCA is created for, right? So basically you will still profit when it goes down, but you're protected when it temporarily goes up. And moreover, you actually increase your position. And basically, if you're eventually right, you will actually make more profit because your position will be higher. So that's the basic use case for DCA order. For DCA Algo, use manual mode to basically kind of do one better for, like, instead of normal trading setup of an entry order with stop loss and take profit, you add averaging orders to your trading setup. So that's one use case. Second use case, actually, this DCA manual mode can be used as a multiple take profit kind of setup. Okay, so you know that HNC is delisting, or maybe it's moving to Solana. You don't like it, wherever. Okay, you want to get rid of it, and you happen to have some HNC in your account. So what will you do there? So basically, instead of just putting a sell order, you would do the following. So you will go to DCA, and basically you would put one sell order here, and then use these averaging orders. Those are still sell orders. So instead of having one sell order, you actually have 6 sell orders. Maybe you just want 5 of them. Okay, so it's one entry and 4 average and 5 orders in total. As I said, you can adjust. They're basically their sizes. You can select. There can be you can place one coin here, 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 or you can basically create some kind of a scale. You can place more and more, and the price goes up, or less and less. That's up to you. And again, any distance between those levels can actually be set as well. So let's say I just want to increase the distance between them like this. So I want to place, basically take profits every 2% price change. That's what I do. So I have HNC on hand, and I place basically 5 sell orders, right? Stack here with similar size. So I will sell one HNT here. First averaging order will be still with one HNT, and all the other averaging orders will have the same size multiple. So there will be this 1 times 1, which is 1. So by this setup, I will just basically I'll place one HNT at each level. I have 5 HNTs. I'll sell them, right? If the price keeps rising, I have those 5 take profits for me. Of course, one caveat here is that there is actually an actual take profit to this DCA, because DCA doesn't really know that you already have HNT, you just want to get rid of it. So, okay, what to do this? Unfortunately, DCA doesn't allow to turn off the take profit at all, but what you can do, place it at 99%, for example. So that's your price range, and the take profit just went somewhere like way down. So okay, so you still have your 5 take profits here. 1, 2, so 5 sell order. Sorry, it auto scales, so I cannot. So it always want to show the take profit. So fortunately, that's the best I can do under the circumstances. The scale will be a bit small here. Okay, maybe not 99. Let's say 50%, just to make it easier for the eyes, right? Okay. So those are your 5 take profit orders, and you have another take profit order. So basically, those are your sell orders. But in case it happens that HNC goes down by 50%, okay, you will buy it back. Or okay, you can put here, as I said, 99%. So it will only buy back your HNC if it falls 99%, which is probably not the worst scenario. But again, look, you don't have to wait for it to happen. Your 5 take profits hit. With each order execution, you will get a push message. Once you see that your 4th averaging order executed, you just go ahead and kind of stop the DCA, and that's it. So you just got yourself multiple take profits. And of course, if you want to, you can. That's basically that's if you want to sell them, and you can do vice versa for a short position if you want to buy it back, right? So just mirror it down. Okay, so that's basically a second scenario for the manual mode. So let me put take profit in a reasonable range so we can see something on the screen again. So let's go a step back. So the first use for manual mode is to basically use it to buy or sell some asset with additional safety orders, and after take profit and stop loss, which adjust automatically. Second scenario is use the DCA as multiple take profits. So basically, you can choose any number of your sell orders here. You can choose any size for them, and basically their steps between them also can be set up pretty easily, right? And so the first scenario here. First scenario is if you want to actually enter a position, right? So at a better price. So actually, we kind of arrived at a bit late in the game, but that was the original idea behind the creation of the DCA algo or the logic, right? So basically, this scenario goes like this. You're a hodler. You want to accumulate BTC, and so let's go to BTC, right? You want to accumulate BTC, and you pretty much comfortable. So you want to basically maybe enter at right now. So you buy just a little bit. So you start with buy. You want to buy a little bit, and you want to buy every 10% that BTC goes down. So here you go. You just first average order price step is 10%, and all others average orders are also at 10%. Here you go. Now you just bought BTC here, and then every 10% the BTC price goes down, you'll be buying more and more BTC. Again, you can change this percentage, of course, not to be 10 or but whatever percentage you want to, and you can choose any kind of size here, so you can buy this in equal amounts, or you can buy more and more, or less and less. It's up to you. But again, if you just want to establish a position, basically average down the price and just establish it, again, you can use the DCA for that. Again, here, as in the previous example, you have actually DCA take profit, which is still here. So just to make sure that it doesn't interfere in your setup. You just set it at 99%. So if so happens that BTC goes up to 55K right away, okay, maybe you'll sell it. Not a bad 99%. It's not a bad return, but again, you don't have to do it. Of course, once your any number of your original order filled, you can actually cancel the DCA and basically get rid of this take profit that you don't really need. Okay, that's the first scenario for the manual. Let me recap them. So manual mode gives you an ability to either buy or sell an asset efficiently when you believe expected price to go up or down respectively, but with the safety of placing additional average orders just to protect yourself in case price initially goes in the not in your kind of anticipated direction but against you, but eventually, if it eventually moves in your direction, you will actually make more money with DCA. That's one. Second, you can use it as multiple take profits if you have some asset on hand and you want to sell it at several levels. And the third, you can actually use it to establish a position at a better prices, averaging down, so buying more as the price goes down. So these are the manual modes, but now you can already see that it's pretty powerful tool, but now you can actually, you will look at the cherry on the cake, so to say. There is an auto mode or TA signal mode. So basically, in this mode, rather than entering when you manually tell it to, the DCA algo will look at some kind of signal and enter when that signal tells it to enter. Right, we start here with first set of signals, which are based on technical analysis summary, which was developed originally by TradingView. So we calculate it ourselves, but basically we use the methodology that TradingView uses. What are the signals? If you were using our app for some time, you already know that there is this tab which is called signals. You can actually see. So what we do, we take quite a few of moving averages. Those are the moving averages that we take, and we add there quite a few of oscillators. So basically, those are the most popular, the most commonly used technical indicators that traders use, and maybe we combine their signals, their ratings into one combined rating. So, for example, you see that most of the oscillators now are neutral. One says sell, but then moving averages, actually most of them tell you buy, some of them tell sell, and just one is neutral. So your overall rating, which is actually just changed, is about neutral. It was just, it oscillates between very, very kind of initial buy, not very strong buy, very weak buy, and neutral, right? So we have neutral, buy, sell, and strong sell. So that's basically, these are the signals that we're using at the moment. In the future, there will be many more. There will be custom indicators. There will be any number of indicators and a combination of them that you can set for yourself. But there is a reason we started with these signals, because for 99% of the cases, you would do better actually relying on those signals if you're not a very experienced trader and you don't know exactly what you're doing. Believe me, this is like the best you can get. There is a reason this methodology is so popular. TradingView was working on it for a number of years, and we are very grateful to them for creating this methodology. We use it, we like it, and it's a pretty robust and powerful framework to use. So again, we have those signals, right? And basically, what the DCA will do, you can choose, whether you want to react to just buy, sell, or sell signals, or only to strong buy or sell signals, and you can choose signals on which periods, on which candles you should react to. As with any technical indicator, shorter candles produce more signals, but usually less powerful, less strong, and higher up the candles you go, the less signals they produce, but usually they tend to be more powerful, right? So the signal tends to be clear. Now, in this case, you don't have to choose between them. You can choose several of them. So you can do this, or just choose all of them, or we can choose any combination of them basically. So those are there and. So if you choose 1 minute and 2 hours, that means it will and strong buy and strong sell. That would mean that DCA will wait once on the BTC USDT pair on Bybit there appears a strong buy or a strong sell signal on both 1 minute and 2 hour candles. Okay, let's maybe go with 1 minute and 5 minute candles and just look here. So you see here there is 1 minute candle which now shows strong sell. Right? Moving average just shows strong sell, but combined actually is just sell, and 5 minutes shows actually it's neutral. So once both 1 minute and 5 minute signals go either to both of them go to strong buy or strong sell in this setup, then the DCA will enter. So now you can see if we choose two sides, we have two set of orders because it will enter. It will enter where it entered. We show you it from the market price at the moment, but of course, the price can move to any direction when the signal basically triggers. So when that signal is received by DCA, DCA will open a position and then will do what we've already seen. It will place additional buy or sell orders to average down or up the average price of the position. It will automatically adjust take profit and stop loss. It will adjust their sizes and it will move to take profit to keep it at your chosen percentage distance from the average position price, right? So, and what was the best about this auto mode, there is a repeat button, of course. So basically, what you say, now we only give you a repeat on take profit option, but obviously in the future it will be much more flexible. You can choose other repeat options. You can repeat on stop loss as well. But for now, basic idea is DCA receives the signal. Let's say, okay, you only chose, for the sake of simplicity, you've chosen strong buy signal on 1 and 5 minute candles, right? So once the DCA receives that signal, it enters here, it places those additional averaging orders. There is a take profit here. It does what DCA does. If and when the take profit is hit, it will basically restart and start looking for the next strong buy signal. Once the next strong buy signal appears, it will basically repeat the same, the following. Obviously, that could happen at different prices, right? So first buy signal will be received here, then the price will change, and the next buy signal will be received at this level or at this level. Anyway, so basically it will do this, or if the signal is here, it will do this, and the market price will be here. So, but you get the idea, right? So it will repeat this setup if and when it receives the same signal all over again. So basically, the setup is quite easy here. It's straightforward. The question is, how good are the signals? Again, as I said, in the future there will be many more signals. There will be your custom signals. You can set up whatever you want to believe works. But as I said, for I would say 90, maybe 99% of the traders, 99% of the time, this technical rating summary is the best you can go. So basically what they do, in a nutshell, these are moving averages, which pretty much, it's more complicated than that, but basically they say, when the price starts moving up, you should buy. When it starts moving down, you should sell. Of course, it's much more subtle than that, but that's pretty much what moving averages do. And oscillators, what they do, they're trying to basically to tone it down and to make sure that the buy or sell signal only appears if the move up or down is so-called true, right? So it tries to eliminate the kind of false or the noise in those moves, and just make sure that kind of the fundamentals really show that the move that started up is going to continue, and there is a good reason to believe that it's going to continue, or same way when it goes down. So basically, those oscillators counterbalance the moving averages. Moving averages, so to say, they're like very quick firing kind of buy or sell signals, and oscillators, they smooth it down. Okay, so these are in a nutshell what the signals do. How well do they perform? Look, I don't want to be too encouraging. Obviously, there doesn't exist just a money button where you just kind of push it and it kind of keeps producing money without any risks. No, of course there are risks involved. As always, you can still blow out your position. You can lose money if price keeps going against you and hits stop loss. But just as an example, just we've just launched this algo in production a couple of days ago as of now, and I have quite a few algos that have been running for some time beforehand, as we've been testing the algo, before we release into production. So I can just quickly show you what I have in my account. So I have quite a few of them. They have different. Those are obviously, those trade maybe for 3 to 4 days. Those are kind of newer ones just launched today. What I can say that I'm trading that for now almost 2 weeks. Those are kind of I've just kind of stop them and try new ones because we kind of change some settings. We realize the service, but anyways, insofar in that couple of weeks of trading, I didn't hit a single stop loss. So basically, that means that the signals that they produce, they all run on signals, and the signals are pretty robust. At least they can produce robust signals for quite some time. And you can see, for example, I don't know, let's have a look at the older ones. So for example, this one, it got 54 iterations under the belt. So it means it hit basically take profit 54 times straight, right? So those number of iterations, that basically the cycles, when they repeat, the repeat of the DCA only happens on take profit at the moment. So basically you can see this number of iterations basically represents the number of take profits that have been hit in a row, right? So 30, 18, 42, 54, 20. Those are less volatile pairs. BNB is not performing too well on that. ETH is just not performing at all. So you can have again BNB. So it's just 5 take profits, but so higher volatility coins. For example, HNT I've just launched today. Launched it for 10 hours ago. What I see here, it already closed 17 iterations. So basically it hit take profit 17 times straight. I'm using here 1 minute plus 5 minute strong buy, strong sell signals, and basically what you can see here, and just let's look at our completed orders. So let's start with the beginning. So with enters, there is one average in buy and take profit. Next iterations, enters, take profit, enters, take profit, enters, average in buy, take profit, enters, take profit, enters, take profit, enters, average in buy, take profit, enters, take profit, enters, take profit. So you see, that doesn't look like a coincidence, right? So obviously there is something to the signals, and if used wisely, they can produce powerful results. Again, of course, risk management is key. There are a lot of moving parts here, mainly the number of averaging orders, the distance between them, and their size, because there are several major strategies of trading with DCA. You probably heard at least about one of them, which is called martingale, which comes from gambling, where you basically double the size of your averaging order with each level. It's a very powerful instrument, very dangerous as well, because basically, as you can imagine, doubling on each level, if you have even 5, 7, 8 levels, the size of the position grows quite quickly, so your losses can be substantial should the price really move against you. But there are ways to minimize the risks and make DCA trading quite profitable. You've probably heard about some of our competitors. I won't name them in our video, but they've built quite sizable businesses on those DCA bots, pretty much relying on the same technical analysis functionality and there are thousands and thousands of traders using them for quite some time. So I would say that there is something to those technical indicators for sure. So okay, I won't go into more details here. So to sum up, again, DCA Algo, DCA Bot, what it does, it enters a position either by your direction if you tell to enter with the buy or sell order, or according to some automated signal that it receives. Once it enters the position, it places additional orders that basically increase your position at a better price. If the price keeps moving against you, you choose the number of orders, you choose their size and the distance between them, and it has take profit, which automatically adjusts as all these orders execute. It automatically adjusts its size and it moves down to keep it with this at the same distance of average position price. And if you set a stop loss, it will do pretty much the same. It will also automatically adjust as more orders execute. So this, in a nutshell, is the DCA bot. In our next video, we'll look at all these nice lines here and learn how to actually set up and what to look for and what those are things actually mean. I would just say that we try to make it as self-explanatory as possible. Like our understanding, if you go through all these eyes here, you will get all the info that you need. In this video, frankly, 99% of what I said is already here in the eyes, and 99% of what I'm gonna say in the next video certainly is here in those eyes. It's just with less words, it's much more concise that I'm in this video. So okay, I encourage you to try play with small sums. If you're a beginner, just see how it goes. And the next video we'll look at the setup, and again in one more video we'll probably look at the running bots and see what analytics is available there, what you can kind of deduce from looking at those running bots. Okay, thanks a lot. If you have any questions or concerns, just kind of comment here or go to our Telegram channel. And I encourage you, of course, if you're not already our user, you can download our app. We have a 14 days fully featured free trial. You can try this amazing tool for yourself, and we offer best price in the market by far. You'll find it in the app, and we'll also offer a very robust referral program, which we just launched. This offers best conditions on the market, and you not only will get a percentage of all the subscription revenue that your referral generate, but actually you will get basically paid for the trading volume that your referrals generate in our app. The more your referrals trade with GoodCrypto, the more you earn. It's a very powerful program indeed, so I encourage you to go and check it out. It's actually lives here in the settings. Just hit settings and there is a referral program there. Thank you very much for watching, and goodbye.